Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to have a look at losses, which does seem a strange topic when trying to look at how a software is done in the markets, but all too often too many software vendors never look at losses, and I think it's important to look at these, discuss them, and make sure that every trader knows, understands, and also accepts that any trading approach will have losses. The trick is keeping the losses small and having an approach that has profits larger than the losses. So being a successful trader is not about avoiding the losses, it's about controlling them. So that's why I wanted to have a look at this in today's webinar. In particular, I want to have a look at how the ES unfolded yesterday, which was April the 28th. You can see from our standard STF indicator, the market rallied up, went sideways, and then we had a couple of history triangles here. Do you see these on the charts? So these show where trades would have been triggered, and then if the market carried on through without making a new pivot, would have then been stopped out. Now this was actually a double bottom. So if I place the analysis on this first bar, you can see that you were taken into a trade, but then you weren't stopped out of that trade before the second trade was triggered or highlighted. So in other words, you would not have taken two trades. So can you see that? So even though there's two history triangles here, once you place the analysis on, it would actually only be one trade. But as you can see, this trade was entered, it came down, and then was stopped out for a loss. Remember, we use correct position sizing to keep our losses small, in this case less than 2% of a sample $20,000 US dollar account. So yes, this would have been a losing trade. So it's important to know and understanding and accept that losing trades will happen. Let's have a look at the higher time frame chart as well to see whether that would have helped us. So for this, we go out to our 15-minute chart and we place our DPs on from prior pivots. Now it's important to understand these are leading indicators. So going back to this swing pivot here on the 23rd, right mouse click, do DP. This chart would have been, this DP level would have been on your chart in advance, even before yesterday even opened. That's the thing to understand, that this support level would have been here before yesterday even opened. And as you can see, the market opened, declined down, and this nailed the very low of the day for you. The market then was rallying up. You can see there's no prior pivots here to get any resistance levels on. So as you're coming down into this corrective low here, which is where these TS3 buy setups were on the 3-minute chart, the large trend would have still deemed to be up, so you would have still taken them. So let's go down to the 3-minute chart and see how this looked. As you can see, our 15-minute DP nailed the very low of the day there for you. So that would have meant that you would have actually been at the very least avoided taking any short trades down here, so that would have helped you in any other analysis you would have done. There was also another buy setup here earlier in the day, but the STF was red, largely trend was down, therefore you wouldn't have considered that anyway. However, still, you would have considered these buy setups here, or I should say this single buy setup here. So even with our larger degree analysis, this still would have been a losing trade. So I just think it's important, and this is why I did the video today, to just purely and simply showing a losing trade and what probably would have been a losing day for you on the E-mini yesterday, which was the 28th of April. But just to again to reaffirm that even though you do have losing trades, the important thing is keeping these losses small. This is what our position sizing does. So when you have a loss, it is kept small at one risk unit. So then when you have profitable trades, you can see here if this did go to its profit target, the profit would have been 2.4 or 2.5 times greater than the initial risk, or the profit's much larger than the losses. That's the key to successful trading. Just clear this analysis off, but otherwise with our more advanced analysis, even if you didn't have an MTPredictor trade set up at the low here, it was very nice to, to have that support level on your chart, which actually nailed the very low of the day for you. So that would probably have helped if you're doing any other trading using other techniques outside MTPredictor as well. So that would have helped you trying to take other short trades down here and otherwise avoiding a losing trade. So advanced analysis did well by catching the low of the day, but our standard MTPredictor trade setups would have actually had a losing trade day yesterday. So that's just important to know, understand, accept that all systems will have losing trades, and I thought it was important to do the video on that and stress that. But as I've said already, the important thing is keeping the losses small, and then when the good days come round, you have profitable trades that are far greater than the losses, and that's what makes you money over time. And that's what MTPredictor specialises in, keeping the losses small and profits large.